The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading, and you got markets popping. In the pre-market, S&P's up by a solid 1% right now. We're over 100 points off of the intraday lows yesterday afternoon. You caught a little bit of an acceleration towards the close, and we're catching that acceleration again in the pre-market. S&P's up by 54 points or 1.05%. NASDAQ 100, we're up by 215 points, up 1.2% right now. 18,139. The Dow up 419 or 1.1%. And the Russell up by 22 points or 1.25. You have volatility to the upside in the indices. Crude above $63, $63.13, up by 73 cents. Gold, one of the stories of the day for sure. You'll see the headlines, 3,500. How about it, man? If you were up between the hours of about 11 a.m. and 2 a.m., futures, 3,509. Now, we've given up $65. Yeah, $65. And where are we? Right where we were about the end of this program yesterday. 34.44. Now, that was up $100 from the prior session. You take a look at the daily. We'll take those off. And yeah, it's quite an extension now. As we're approaching the 1-to-1, we completed that at about 33.50. We were talking about that for a while. We've completed that. If you're looking for the next level, man, 38.50 is the 1 to 1.618 expansion. There's nothing above where we are right now, and that's the 1-to-1 from February of last year up to the highs we had in October. You bring it back, and then you do it all again. You jump over to yields this morning. That's a weekly. Let's put it on a daily. And yes, somewhat muted in terms of the volatility that we have been getting. You check out the 10-year right now, we're basically just flat. We're up by one tick, 4.38 to 4.39. So almost pushing 4.4, the yield on the 10-year right now. And you jump over to the dollar index. And yeah, maybe we caught a bid. And I only say that as in the red has stopped for right now. Okay, we find a bid at about the 98 price point, and we're up to 98.63 right now. We had a price tag of 97 in the early hours of Monday morning, and we hit 98 in the early hours of this morning, and we've caught a bid to 98.65 right now. Jump over to the VIX. 35.75 was the spike yesterday as the market was deteriorating. And you can see, though, the VIX not quite ready to give it up just yet, right? 31.80. And, you know, some of these equities, boy, you take a look at Microsoft, all right? I was taking a look at Microsoft yesterday. Folks, you could have bought Microsoft the morning of the 90-day pause. Let's see if we can back it up to even get it. Yeah, there it is. Now, there's where the acceleration really takes off on the 90-day pause. Yesterday, the market was pulling back so much that you could have been in a losing position, all right? Yeah, you're marginally higher right now, but you buy Microsoft just before the news of the 90-day pause, and you're in a losing position yesterday. Okay, now that's not the case across the board, but that better be a heads up because there's nothing dire in Microsoft that's pushing that back. You back it up to Apple shares. You were pushing about 180 prior to that news. You make it all the way up to what? 200, even 210, and you were back to 190. Apple's getting a lift this morning. You check out Amazon shares, similar action. Check it out, right? So these equities have now given up the entire bounce from the 90-day pause. That should be alarming. When really, that was pretty good news in light of the tail risk, right? Nobody knew if that was coming. People expected that was coming, but there were risks baked in that it wasn't coming. It was coming, and still we have Amazon. Okay, now Amazon's up a few dollars this morning, but look at that acceleration from 194, okay, and even if you're talking about 185, which we were at for a few days, Boom. We're down almost 10% off that price level. You hit 165 almost yesterday on Amazon shares. Remarkable. NVIDIA, same exact story. Okay? Many of the equities that have been driving this market higher, and I'm kicking off the show with it today because yesterday afternoon I was looking around, and yeah, we're getting a little bit of a bounce today, okay? But that is some dire circumstances when you're talking about giving back the entire move. You had NVIDIA shares trade from 97 all the way up to, 115 that day? And just like that, we're back to 95. Now, I talked about yesterday, the forward PE on NVIDIA right now, not that high above basically the S&P 500. You look at the pullback, we go bigger picture on NVIDIA, and yeah, we bounced to the 618 of that move on the initial week, and that's where we're coming back into again, I expect. And you're talking about $85. You hit a low of 86.62 on that weekly there for NVIDIA. We jump to the headlines, and yeah, it's going to be about gold for sure, and it's going to be about some of the tensions here in this market. Gold sets a new intraday high above 3,500, and check it out. Gold stored in COMEX-approved vaults, and yeah, from 20 million troy ounces to almost 45 million troy ounces. That is quite a run, man. Yeah. All right, and what do we have going on today? So we get earnings, and we're going to get Tesla. So Tesla, where do you begin? Let's begin with the technicals, folks, okay? You give an entire give back. We probably have a little bit more ways to go, all right? This run really began a year ago in April, but you've completed that cup and handle. You know, you come right back to that area. You probably need to build a little bit of support. We have quite the volume spike on that 90-day pause. But yes, this is talking about potentially, this year is going to be potentially a throwaway, okay? And if you recall Dave Mazza, he used to be with Direction. He's now with Roundhill. They got some quotes from him. And yeah, how about the profit estimates? Earnings per share estimates for the first quarter. Look at what it's done over the last year, right? Yeah, remarkable. And then you look at the share price. You're right where you were a year ago. Look at the earnings differential, okay? Yeah. And that's Gene Munster with that throwaway year, man. Tesla trade at 78 times forward earnings compared to the S&P 500 at 19. It's all based on a story, which can be good and bad. You want high volatility? Base something off a story that can change at any moment. So we get Tesla earnings, and then we got Google earnings with their numbers on Thursday, among many others. Tesla this morning trading up to about 231. We take a look at the volume on this equity, okay? It's quite a volume spike, but we got all this volume at the lows. You know, and zooming in on this action here, this market right now, okay, folks, has quality volume to the downside, period. End of story. I'm going to zoom on this again. I'm going to highlight the volume. Yesterday was the first time that we really didn't get some follow-through. We'll see if today we can finally get a bid, but we have not caught a bid in this market. Even the April 9th day couldn't match the downside volume we had when we had the 90-day pause. Stay tuned, folks. We're coming back. We'll be back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. You jump back to the markets. S&P's up by 54, NASDAQ 100 up by 208, Dow up by 411. We got markets in positive territory. And how about that gold contract? You know, you talk about volatility, up by $26, but we just gave up almost $60 from the high. Look at that volume already as well. Remarkable volume, man. That's the daily volume. Whew. Big time volume. Let's pull it up on the 5-minute. Look at that volume coming in even right now as we speak. Look at those spikes. This is a 5-minute bar. We just did 5,400 contracts. We just did 4,800 contracts. Okay. So we talk about earnings season. In light of tariffs, how are the CEOs and the CFOs and anyone on those conference calls? They're going to handle questions. How are they going to handle them? We'll find out. Earnings to offer clues on how much tariffs will boost prices. Really, I want to talk about the margins for a moment. Check out this, right? U.S. companies enjoy near record margins. After tax, corporate profits rose 5.9% in the final quarter last year. The red line here, U.S. non-financial corporate profits as a share of gross value added. Okay? Look at that number, man. Look where we were for when you're chopping around between 5 and 10, and boom. That is an acceleration coming out of COVID, of course. Now, there's a lot of volatility. I pause, as in, some economists are saying you could see some of the inflation gauges rise to maybe you're pushing 3%. Some say, no, this could push it as close to 5%, okay? There will be impacts, for sure. Are they going to be transitory? We will find out. But nonetheless, when you get into, and this is what they talk about here, okay, Walmart's going to be able to lean. We've already seen the stories, right? Trying to lean on their suppliers, whether it's overseas, whether it's in China, for them to eat the cost itself. And then you have the companies, though, like Nike, Skechers, okay? 7%, maybe 10%, they're going to have to raise prices just heavily with the supply chain in certain areas where they just can't avoid those types of things. When you talk about Target, Five Below, yeah, they see prices. Morgan Stanley sees prices rising at Target and Five Below more than 5%. Gross profits dropping more than 20%. And then you get to smaller retailers. That's where things get a little bit more difficult for the choices, okay? Yeah. The margins are going to get squeezed at a minimum. And that's where we'll find out. We're going to get some clues, man. Tesla today, many equities. I think we have about 1 out of 5 S&P 500 companies reporting their earnings today. All right, we jump over to the home builders. So we have yields rising. We have dollar weakness. We have tariffs. And, boy, we get a lot of some goods, okay, inputs for housing, whether it's from Canada, whether it's from China. But take a look at these home builders. They haven't found a bid yet, folks, okay? And that doesn't mean necessarily that the real estate market's in trouble, too. Remember, right? They've been the only game in town here for a while. As in, I say the only game in town. They're still pumping out houses, okay? And you look at the longer-term chart of these, $62 to $193. And what do? We come right back to $100, man. All right, we go longer term. Yeah. Now, the reason why I'm looking at these, all right, is that home building is cyclical. The housing market is cyclical to a certain degree, for sure. Undeniable, okay? There's D.R. Horton. Take a look at the daily. Just chopping around near the 120 range. Now, what's interesting is when you talk about housing, right, and we talk about Canada. So Canada's prime minister pushes the country to become the housing factory of the world. I bring this up because, of course, I'm in real estate, okay? Many people are in real estate, whether you own your own home, whether you own investment property, you're a landlord, okay, or you're just a tenant, whatever it is. Nonetheless, this story is going to catch some wind, and when you compare it to the U.S., I want to get down to this part. Check out this one, okay? Housing units per 1,000 people. U.S. is at the bottom. Canada's right there. Yeah, we have a housing shortage, okay? So, yes, we should be exploring ideas like this. Now, what this talks about here is that on outskirts of Toronto, a factory is buzzing with activity. The plant makes key parts for houses, specifically walls, floors, and roofs, okay? The factory is operating at half capacity, and they're looking for more demand before they really ratchet up the factory, buy more equipment, invest in CapEx, and build out in terms of the capacity that they can do. This gentleman who's running it, if I have the revenue, then I can scale up everything on the side. Very quickly, we could scale up to double our production. Now, where the problems lie in this, okay, is that number one, they get into in this article, and I'll post this one in the den. This one's a good one, folks, okay, is that number one, housing is cyclical, okay? So you go into something like this versus the normal contractor model, which is you can lay people off. You lay off independent contractors when things go slow, okay? Sorry, pulling up multiple articles. Now I'll get into it. And so what they go into here is that there's two sides of the story, okay? One is people make the claim, this gentleman who's running the plant, listen, we can have prefab houses, okay? We can make prefab houses. We can have plants that churn it out, and that can fill the void of the housing shortage that we have. What you have to address, though, is that if it was that easy, everybody would be doing it. And that's kind of how they talk about here. Factory-built housing has been around for at least 100 years, right? Home building cyclical, and you can lay off contractors versus you build out an infrastructure. And then what happens when housing goes cyclical? What happens if rates shoot up? Your factory shuts down, etc. Okay? And yes, developers, cash flow is everything, right? Developers love debt. Okay, it's a part of the business. Cash flow. Usually, developers receive a series of smaller loans, which with each new stage of the construction unlocking more money. Very difficult for them to find the type of funding, okay, for a longer-term project like this. Now, how can you get over that? Well, you can get over that with government assistance. So what's he going to do? Well, he's going to provide predictable demand with financing as well as equity investment, as well as basically being a buyer in there, okay? As in just buying housing themselves. In Japan, 15% of Japan is manufactured housing. Yes, single detached homes in the country, 70,000 prefab. We'll talk a little bit more, but America, this one, maybe in certain spots, but it's not the holy grail. It's just not that easy. Zoning challenges. We'll talk some more housing when we come back. We'll take a look at equities. We're coming back for the opening bell, folks.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have equities open. Markets in the positive with the S&Ps up by about 1%, up 53 points. NASDAQ 100 up by 196, just more than 1% as well. We got the Dow up by 1% on the dot, and the Russell just over that level, leading the way, up by 1.2%. So yeah, just going over the story because it's interesting. You know, my dad, he traveled to China in 2019, brought over a container with, to a certain degree, a prefab house. Now, this one was more steel from China, and it's basically about completed. And it went okay, but I can tell you there were a lot of issues in housing. And if you've ever been through, whether it's a renovation, right, whether it's a complete build, there's always issues you go through. Well, when you have prefab housing, it's even more pronounced, some of what you go through, okay? But, and here's where they talk about, where's the zoning challenges, okay? Because that is a substantial part of it. Canada has one advantage in building it. It's already a major producer of wood, okay, but one of the biggest difference, as is the U.S., a major reason for the shortage is municipal rules that limit what can be built and where. Building codes often dictate materials, roofs, window appearance, and more. Folks, the level of detail, I've gotten a little less than myself, and I was aware, but now since, you know, running everything, since my dad, the level of details, of course, that go into it. I mean, you just take a look. Now, St. Pete, if you ever go into the zoning of St. Pete, they have an outstanding map. And this is just like a real quick example, okay, of the type of different zoning differences. Now, in the yellow here, you're looking at just basically houses, okay? Neighborhood traditional, NT2 is what they call that one, okay? And we get down, this is what the zoning looks like. You get into NT1, which is neighborhood traditional, NT, neighborhood traditional, all right? And it varies, though. This is just St. Pete, but they have an outstanding municipal map that you can look at everything, and you can see different areas zoned. What you're seeing here is in the blue corridor in the middle. All right, we'll do a quick one. Here, we're looking at the top. Here's a quick one. All right, this is St. Pete, folks. Okay, this is, let's back out big picture to give you a quick glimpse of where we're looking at, right? There's Tampa Bay. There's St. Pete. You zoom in on St. Pete. And what's so cool in these maps here is that, you know, as I mentioned, in the yellow here is a lot of just neighborhood traditional single-family houses, okay? Now, what's so cool is in the middle of this map, where my cursor is Central Ave in St. Pete, okay? And what you can see they do is, and this is how and this isn't for the purpose of this article, but this takes place in every single city, and every city has their own zoning and their own details and their own city planning. And I think St. Pete has done a tremendous job of allowing, for instance, accessory dwelling units, mother-in-law suites over the garage. St. Pete's done a great job of expanding the ability. We need affordable housing. You need to open up the ability for people to build affordable housing, okay? Many people in the St. Pete area, if you live in the St. Pete area, you have a home, you have the ability, you can just put an entire second unit in an accessory dwelling unit, or an ADU if you look it up, in your backyard. Now, yes, there's many different zoning rules and regulations that you have to look into and follow, okay? But if you have the space, you have the square footage, etc., right? And so what's cool here is you have Central in the middle, and of course, they allow much greater building in Central. You have an activity center that's in Central here. You have, and then you go outside of that, and you're looking at a CRT2, and CRT2 is talking about, I think it's commercial corridor residential traditional, all right? CRT, corridor residential traditional. And what that is they're looking for more, and here, watch, we'll just go to where it is so I can show you. When you get into the CRT, okay, what they're looking for is maybe a little bit of mixed housing, maybe a little bit of townhomes, okay, maybe a little bit of higher rise. You're transitioning from Central Ave, which is happening in business and high rises, right? And then you slowly get away from that to single family. Well, you can't just drop off from a 4-story building on Central with commercial to a single family. You have to transition to that. And so they have all the different zoning. And then you get further than that, and you have CRT1. So you have CRT2, which provides a little bit more flexibility. Then you get CRT1, which is less, and then you get into the residential. But every city has their own zoning maps, okay? And so when you look at a prefab like that, if everybody could already do it, they would be doing it. And even bringing in one house from China, again, different story in this China house, okay? But you face issues where you go to, like, for instance, the inspectors, right? The city inspectors that come in and inspect the property. Some of them had never seen something like that specific prefab house. Okay, then you have to bring in a third-party engineering firm that they have to actually help the city, in essence, right? You're paying them, their third party, for the type. I mean, there's all these things when you start getting out of the normal function in each specific area of housing. I mean, and then you get into the zoning of, building. And anytime you get above commercial, okay, and commercial is really usually above 4 units, all right? If you're doing 4 units, you have a lot less regulations you have to go through. You get above 4 units and you start doing commercial, then you're talking about everything that goes with it, from fire, right? Fire is a big one because you're a commercial building. Handicap access, all of that stuff. Your commercial building comes into it. Ramps, parking spaces, elevators can come into it at that stage when you're dealing with 4 units. So everything changes when you get above it. But the level of detail, and what is amazing is, you look at this map. I mean, city planning wise, St. Pete, and there's a reason why they're on the rise. Okay, great city planning. And they go even further than this. You want to see this? So this TEC local overlay. You see this part here that's all chicken scratched? So this part here used to be a warehouse area, okay, in St. Pete, folks. And what they did is that they have what's called the Sunrunner. Let me see if it overlays. No, it doesn't. And the Sunrunner is basically a bus. And so it's transit. And so this is transit-oriented development is what they're calling it, okay? Let me see if I can find the TEC. Let's see, TEC in here. Because I tell you, I've learned a lot about this myself in the last 6 months, folks. And so what they basically do is they loosen up the entire zoning requirements in this whole area here. Okay, now I'm going to overlay it and underlay it. Okay, you're right next to residential here. And in the same way, you can just build higher and you need less parking because of the ability that they don't need parking on every single spot when they have already invested in transit. Right? So they're giving people the options across the board. But when you get back to building prefab, and it fitting everywhere, yeah, building codes often dictate materials, roofs, shapes, appearances, window appearances, folks, the slightest details when you get into it, okay? And every time you make a small change, you're dealing with 5 to 10 days to 30 days. I mean, we have St. Pete right now. When we got clobbered last summer with the storms, the city is completely overloaded, and they're doing a great job, St. Pete. But everybody got wiped out, right? You have all these people that need to rebuild in St. Pete on the water, etc. All of that needs to be approved. A lot of that is taking precedent, rightfully so, right, over just new developments. They're making sure both are moving forward, but they're putting that, and so it's and that is all zoning that they're dealing with. So when I look at that, yes, it could be one avenue, but zoning is a big portion of everything going on, and the prefab always runs into problems when you're doing that, and then you get into the cyclical nature of it. It's a tough one to go through that. Yeah. And, if it was that easy, the market would find a way. Private equity would find a way if it was that easy. It's not about the funding, okay? It's been around for a while. Be careful of that prefab housing. We're coming back, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, You choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Apologize, I got muted there somehow. Okay, we take a look at the S&P, so we're coming up to a critical area right now. We check out the 15-minute, and you're right at the lows of last Wednesday, okay? And that's also basically right where we're coming into the open yesterday as well. I was talking about on the program yesterday saying, man, we're right back to where we were on Wednesday's lows, and boy, the acceleration began. And yeah, that's a critical area right now. And you take a look at the daily. You know, you got volume drying up completely on this little bit of consolidation, almost looking for a breakout one way or the other, right? You catch that acceleration on April 9th, and since then it's just been a volume dry up, especially on that spike on the 14th and 15th. We keep our eye on the dollar, catching a bid from yesterday's low at 98.62, we'll call it, and gold right now. Look at gold giving it up. All right. Whew. You got gold going red for a candle at least, but up by $2, but we just gave back $85 from that high, and boy, we're doing it on volume, rejecting higher price right now. And yeah, at some point it would make sense that this market needs to breathe at some point. You know, it's you take a look at the dollar, and we just had a run from 110 to 98 in the span of 3 months, and that propelled the gold contract over that time in the same way from 2,500 to 3,500. So at some point, silver 32.56 right now, silver, and look at the difference in silver, right? Maybe that will change, but not yet. Silver continues to underperform gold, nothing changing there, and just kind of chopping around the $32 price point for silver. Check out copper. All right, copper. We got a nice break from the $4 price point in copper. We're continuing higher right now. Copper up another 9 pennies to 482 right now. We get that spike high of 530 from last month. Let's check out some of the Magnificent Seven as this market continues higher. Apple's up 2.2% right now. Microsoft shares up by 0.6% right now. Google shares up by 1.1%. Yeah, and it is interesting. The antitrust and et cetera. You talk about whether it's Google and Facebook, which up over the Meta shares right now, up by 1.5%. You talk about a give back from 740 to 492. And yeah, I would say it looks like they have some issues. Doesn't mean it's going to be a dire circumstance for any of these companies going forward, though. Yeah, Meta sitting right at the 382. Let's put this back on a 5-year weekly. We caught a bid on volume there, but boy, you're trading lower, and we cannot find another bid. You want some follow through here to the upside here. It's tough to imagine how time is on the side of the market right now. As in, the level of uncertainty out there is fierce. And we're going to be dealing with that level of uncertainty for some time. Yeah, we talk gold. You could. It's been a tough April, not for gold, but that's cherry picking a month in a while. But very difficult to pull your way out of it. And then you talk about Powell. It's remarkable to hear the president say that there's virtually no inflation. I feel like if anybody else but Trump said that, he'd be out of office almost instantly. And that is the case to make, okay? If you think there's virtually no inflation and it's not coming, the Fed should be cutting. I don't think that's the way many people feel, that there's virtually no inflation. And yeah, we will see where it goes from there. All right, we talk a little bit of Buffett. How about it? What's he going to do next with all that cash? He sells out of Apple at a decent time. And yeah, he is sitting on a remarkable amount of money, $318 billion. How about that? Much of it piled up in some safe treasuries. And yeah, he closed out Apple around $110 billion in paper gains. My goodness, right? And look at that. But he's got to do something with it. And I'm not sure he's quite at that point. I mean, I don't think valuations are at the point that some of the deals that he got, even I remember them, folks. I was in my early 20s in the 2000 burst. And man, I even remember them when he was coming in to save some of these companies. Talking with my dad saying, man, that is an amazing deal he just got. But why did he get it? He had liquidity. Okay, cash is king sometimes. And I don't think we're at that level just yet. Folks, we're only at the levels that we were trading at for a lot of last year. He was saying, Berkshire Hathaway was saying the same thing last year, right? Buffett. He was selling last year. He wasn't saying this is great, we're at 5,200 in the S&P. He missed out on a lot of the acceleration because he was selling. But I don't think he's just there yet. Doesn't feel like it, right? Doesn't feel like we've gotten that fear capitulation. And that's not even factoring in. He was saying that before some of the tariff volatility came in. Some of the Fed volatility comes in now. So I'd still keep your spikes up. I don't imagine he's going to be getting those kind of deals just yet where he's employing that capital right now with yields where they are right now. There's a chart of your 10-year, up by 3 ticks right now. We jump over to the 2-year, and down 2 ticks. So yeah, we got a little bit of higher yield on the shorter term basis. The pressure's on, and it's going to stay on. Best case scenario, Powell's in there for the next 13 months, and it's going to be a constant stream of, I can fire you anytime I want, and you better get rates lower. That's going to be a weight on the market, and you've seen it on the dollar. Even though we pause at 98.53, you take a look at this dollar. That's a decisive break below anything we've seen in recent. And you put it on a chart. Looks like 90's in the cards technically. Jump Jump over to Tesla shares. Ahead of their numbers, up by 3.5% or $8 to $235. And as I mentioned, Google out with their numbers on Thursday, up by 1.2% right now. And yeah, we check out gold, giving up some of the gains. Gold now up by $12. Put it on a daily. Rejecting that 3,500 price point, though. That is a rejection, folks. We just traded $70 off of 3,500. We touched that price level. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. As the dollar has been weak, they're selling dollars and buying Bitcoin. Man, you know, it's pretty remarkable. But yeah, you got Bitcoin up $3,000. We're back above 90,000. And Bitcoin heavily correlated to some of the growth equities. So not surprising when you have the NASDAQ 100 up by 1.6%. You have Bitcoin catching a bid. But yeah, I'm sure some of that dollar weakness is weighing, which is pretty remarkable that the dollar enters the conversation of ditching your currency to get into Bitcoin. But that is the conversation right now. The market's not lying. And how about this one? We'll end the program on this one because berries. Go out there and eat some berries, folks. If you're looking for healthy fruit, and fruit, no matter what it is healthy, man. Bananas, grapes, okay, pineapple. I don't care how much sugar it has in it, folks. It's healthy. But berries are the healthiest. Strawberries, raspberries, and blueberries. And this one, how about a $1 billion startup? Founded in 2012. And yeah, you know, if you're ever going through the grocery store, Publix, they got great groceries, great produce. But even there, it's always a little bit hit or miss, right? And fruit, you got to get it when it's ripe. Doesn't stay for long. And yeah, so they got jumbo blueberries. And what they talk about was, yes, it's in 12,500 retailers. But what they did here is they went into, solving the problem of berry roulette, uneven quality of grocery store berries. So interesting. Keep your eye on that one. Now named Fruitist and Berries. And yeah, you got a small bunch of growers. They send their product to a packer. The packer sends them to the distributor or an importer, and then the player is either selling to the retailers or they're sending the product to another distributor, right? And yes, stifles quality. And I would agree. That's part of the reason. Now, I'm not sure that's how it is at Publix, right? But I'm sure it's that way at a lot of places. And even at Sam's, which I love. We'll mention Sam's, Darth. There you go. Even Sam's, which I love, can be hit or miss sometimes on the produce. Yeah, Walmart, not surprising. But if you're paying for Publix produce, you better be getting the best. Nonetheless, they got some competitors. All right, folks, market catch a bid this morning. Thanks so much for tuning in. Stay tuned. We got Basil Chapman coming up next. He's in there in the Tiger's Den, growling and prowling already, folks. Have a great day. Have a safe day. We'll see you tomorrow at 9 o'clock. Have a great one, folks.